Hi, welcome back to the Wealth Academy channel. As you probably know, Bitcoin has become the king of all cryptocurrencies. So today, we will talk about it and the blockchain, how they work, and what they are for. So stay with us and find out a lot of new facts. Before the video starts, make sure to like and subscribe to our channel and press the notification bell so you don't miss more videos like this. Well, if you're ready, let's start. To understand Bitcoin in general and its functions, we must first explain the concept of blockchain. So, blockchain is the underlying technology that many cryptocurrencies operate on. But its unique way of securely recording and transferring information has broader applications outside of cryptocurrency. A blockchain is a type of distributed ledger. Distributed ledger technology, DLT, allows record-keeping across multiple computers, known as nodes. Any user of the blockchain can be a node, but it takes a lot of computer power to operate. Nodes verify, approve, and store data within the ledger. This is different from traditional record-keeping methods, which store data in a central place, such as a computer server. A blockchain organizes information added to the ledger into blocks, or groups of data. Each block can only hold a certain amount of information, so new blocks are continually added to the ledger, forming a chain. Each block has its unique identifier, a cryptographic hash. The hash not only protects the information within the block from anyone without the required code, but also protects the block's place along the chain by identifying the block that came before it. Once information is added to the blockchain and encrypted with a hash, it's permanent and unchangeable. Each node has its record of the full timeline of data along with the blockchain, going back to its start. If someone tampered with or hacked into one computer and manipulated the data for their gain, it wouldn't alter the information stored by other nodes. The altered record can be easily distinguished and corrected since it doesn't match the majority. Since we are already talking about blockchain and Bitcoin, it's best to give an example of how blockchain is used to verify and record Bitcoin transactions. Basic procedures are: a consumer buys a Bitcoin. The transaction data is sent across Bitcoin's decentralized network of nodes. Nodes validate the transaction. After approval, the transaction is grouped with other transactions to form a block, which is added to an ever-growing chain of transactions. The completed block is encrypted, and the transaction record is permanent. It cannot be removed or altered on the blockchain. Bitcoin's blockchain is public, which means anyone who owns Bitcoin can view the transaction record. While it can be difficult to trace the identity behind an account, the record shows which accounts are transacting on the blockchain. Public blockchains also allow any user with the required computing power to participate in approving and recording transactions onto the blockchain as a node. But not all blockchains are public. Blockchains can be designed as private ledgers, so an owner can limit who can make changes or additions to the blockchain. While the pool of participants may be smaller on a private blockchain, it's still decentralized among those who participate. Private blockchains maintain the security of any data stored within the database using the same encryption methods. The idea of a secure, decentralized, permanent record of information has drawn interest across many industries and potentially holds solutions for many security concerns, record-keeping processes, and data ownership issues we face today. Do you know that there is a future based on blockchain? Blockchain gives us the technology to move information securely and have nearly complete certainty in knowing the authenticity of any piece of information you want to protect. Consider, for example, stories that have circulated in recent weeks of meme subjects and celebrities who cashed in on digital property by selling NFTs, non-fungible tokens. Because the underlying blockchain record is immutable, NFTs allow sellers to verify a digital asset's authenticity. When you buy an NFT, the transaction is added to the blockchain ledger and becomes a verifiable record of ownership. For those who want the ability to verify a digital work's authenticity, blockchain helps value digital art and collectibles similarly to their physical counterparts. In theory, This leads to creators maintaining value through things earning royalties on copies made of digital art. For many of us, one of the most impactful use cases of blockchain technology may be protecting and securely transferring personal data. Imagine if your banking information was stored on a blockchain. When you open an account with a new financial institution or transfer information between institutions, a blockchain ledger could help quickly and securely ensure the transfer or new account is accurate and legitimate using your already stored information. That can reduce a lot of costs and a lot of overhead, and also become a good way to reduce fraud. Also, there is predicted that blockchain technology has potential across nearly every industry, because every industry has some type of information that they're trying to exchange in a very secure way. An election run on blockchain technology could benefit from a voting record that gets locked in and cannot be altered after the fact. Businesses could maintain more accurate inventory records using blockchain. Blockchain could even help consumers make more information purchasing decisions with better transparency around product supply chains. The technology may help food suppliers more efficiently trace recalled products, or allow consumers to avoid goods created using exploited labor practices. As you already know, without blockchain, there is no Bitcoin. So let's explain Bitcoin as well. Listen carefully. Bitcoin is a cryptocurrency, a virtual currency designed to act as money and a form of payment outside the control of any one person, group, or entity, thus removing the need for third-party involvement in financial transactions. It is rewarded to blockchain miners for the work done to verify transactions and can be purchased on several exchanges. The question of who created Bitcoin is a fascinating one, because a decade after inventing the technology, and despite a lot of digging by journalists and members of the crypto community, its creator remains anonymous. The principles behind Bitcoin first appeared in a white paper published online in late 2008 by a person or a group going by the name Satoshi Nakamoto. This paper wasn't the first idea for digital money drawing in the fields of cryptography and computer science. The paper referred to earlier concepts. But it was a uniquely elegant solution to the problem of establishing trust between different online entities, where people may be hidden, like Bitcoin's owner-creator, by pseudonyms or physically located on the other side of the planet. Nakamoto devised a pair of intertwined concepts: the Bitcoin private key and the blockchain ledger. When you hold Bitcoins, you control it through a private key, a string of randomized numbers and letters that unlocks a virtual vault containing your purchase. Each private key is tracked on the virtual ledger called the blockchain. What's great about Bitcoin is that you can make it yourself. How? With the help of Bitcoin mining. Now, you're probably wondering what it is, but relax, we're just going to explain. Mining is the process that maintains the Bitcoin network, and also how new coins are brought into existence. All transactions are publicly broadcast on the network, and miners bundle large collections of transactions together into blocks by completing a cryptographic calculation that's extremely hard to generate, but very easy to verify. The first miner to solve the next block broadcasts it to the network, and if proven correct, is added to the blockchain. That miner is then rewarded with an amount of newly created Bitcoin. Inherent in the Bitcoin software is a hard limit of 21 million coins. There will never be more than that in existence. The total number of coins will be in circulation by 2140. Roughly every 4 years, the software makes it twice as hard to mine Bitcoin by reducing the size of rewards. When Bitcoin was first launched, it was possible to almost instantaneously mine a coin using even a basic computer. Now, it requires rooms full of powerful equipment, often high-end graphics cards that are adept at crunching through the calculations, which, when combined with a volatile Bitcoin price, can sometimes make mining more expensive than it's worth. Miners also choose which transactions to bundle into a block, so fees of varying amounts are added by the sender as an incentive. Once all coins have been mined, these fees will continue as an incentive for mining to continue. This is needed as it provides the infrastructure for the Bitcoin network. What do you say? Pretty cool thing, right? Yes, Bitcoin is the best, most expensive king of all cryptocurrencies. You must have heard it called the money of the future. But do you know what makes Bitcoin a new kind of money? Bitcoin is global. You can send it across the planet as easily as you can pay with cash in the physical world. It isn't closed on weekends, doesn't charge you a fee to access your money, and doesn't impose any arbitrary limits. Bitcoin is irreversible. Bitcoin is like cash in the sense that transactions cannot be reversed by the sender. In comparison, credit cards, conventional online payment systems, and banking transactions can be reversed after the payment has been made, sometimes months after the initial transactions, due to the centralized intermediaries that complete the transactions. This creates a higher fraud risk for merchants, which can lead to higher fees for using credit cards. Bitcoin is private. When paying with Bitcoin, there are no bank statements or any need to provide unnecessary personal information to the merchant. Bitcoin transactions don't contain any identifying information other than the Bitcoin address and amounts involved. Bitcoin is secure. Due to the cryptographic nature of the Bitcoin network, Bitcoin payments are fundamentally more secure than standard debit or credit card transactions. When making a Bitcoin payment, no sensitive information is required to be sent over the internet. There is a very low risk of your financial information being compromised or having your identity stolen. Bitcoin is open. Every transaction on the Bitcoin network is published publicly, without exception. This means there's no room for manipulation of transactions or changing the supply of Bitcoin. The software that constitutes the core of Bitcoin is free and open source, so anyone can review the code. Bitcoin is safe. In more than 10 years of existence, the Bitcoin network has never been successfully hacked. And because the system is permissionless and open-sourced, countless computer scientists and cryptographers have been able to examine all aspects of the network and its security. And the final question: would you buy Bitcoin? Surely most of you would buy. But where and how? You can buy it in any exchange. Many marketplaces, called Bitcoin exchanges, allow people to buy or sell Bitcoins using different currencies. Coinbase is a leading exchange, along with Bitstamp and Bitfinex, another way to get Bitcoin transfers. People can send Bitcoins to each other using mobile apps or their computers. It's similar to sending cash digitally. Mining is also an option. If you decide to buy Bitcoin, you'll need a place to store it. Bitcoins can be stored in two kinds of digital wallets. Hot wallet. You can often store cryptocurrency on exchanges where it is sold. Other providers offer standalone online storage. Such solutions provide access through a computer browser, desktop, or smartphone app. Cold wallet. An encrypted portable device, much like a thumb drive, that allows you to download and carry your Bitcoins. A hot wallet is connected to the internet. A cold wallet is not. But you need a hot wallet to download Bitcoins into a portable cold wallet. Hope we have explained the terms Bitcoin and blockchain nicely to you. So after this whole story, do you like the way Bitcoin works? You may want to buy it one day. Share with us your opinion on the comment section below. If you have a question, feel free to write it in the comments as well, and we will do our best to answer as soon as possible. At the very end of the video, don't forget to subscribe to our channel and turn on the notification. If you enjoyed the video, press like. Thanks for watching. Meet you soon again.